On August 6, 2025, two of the most powerful men in the world stood together in the White House. President Donald Trump and Apple CEO Tim Cook. The reason? A landmark Trump announcement today. Apple would invest an additional $100 billion in American manufacturing, bringing its total commitment to an astronomical $600 billion. The market's reaction was immediate and explosive. Apple's stock price surged nearly 6%. In a matter of hours, over $150 billion was added to Apple's valuation. Think about that. A promise to spend $100 billion over 4 years created $150 billion in wealth overnight. How is that possible? How does a future spending plan create more value than the investment itself instantly? The answer has almost nothing to do with building new factories, and everything to do with a high-stakes game of political chess, corporate survival, and a multi-billion-dollar insurance policy disguised as a press conference. This is the real story behind the Trump announcement today. To understand this deal, you have to understand the pressure. For months, President Trump had put Apple in his crosshairs. He publicly criticized Tim Cook for moving iPhone production to India to sidestep tariffs on China. On his Truth Social platform, the threat was explicit and unambiguous. Make iPhones in America or face a crippling 25% tariff. He even recalled telling Cook directly, "I don't want you building in India." This wasn't just talk. Tariffs were already costing Apple a fortune. The company had absorbed $800 million in tariff costs in the prior quarter and projected a staggering $1 billion hit for the current one. This was a direct bleed from their bottom line, and investors were spooked. Before the announcement, Apple's stock was down nearly 15% for the year. The market wasn't just worried, it was pricing in a potential catastrophe. A 25% tariff on the iPhone, Apple's golden goose, would be devastating. So, when Tim Cook stood next to President Trump, he wasn't just announcing an investment, he was buying peace. That $100 billion pledge was a masterstroke, what one analyst called a savvy solution. It was an olive branch extended to the White House. This is the key to the paradox. Wall Street's $150 billion celebration wasn't for the future jobs or factories. It was a massive sigh of relief. It was the market instantly pricing in the removal of the catastrophic tariff risk. The investment wasn't a growth engine. It was a multi-billion-dollar insurance premium paid to neutralize a political threat that could have cost them tens of billions more. The White House got its political victory, framing it as a win for the America First agenda and national security. And Apple got to protect its profits without committing to the one thing it couldn't do: actually build the entire iPhone in America. Analysts agree that a fully US-made iPhone is a non-starter, a fairy tale that would prohibitively raise costs, potentially pushing the price to $3,500. So Apple found a third way, a way to give the White House a headline while pursuing a much more sophisticated and, frankly, more brilliant strategy. This intersection of corporate power and political pressure is shaping our entire economy. And it raises a huge question. Is it fair for a government to pressure a company like this? Or is it a necessary tool to protect national interests? I genuinely want to know what you think. Drop a comment below and let's have a real discussion about this. And if you appreciate this kind of deep dive analysis that goes beyond the headlines, do me a favor and hit that subscribe button and turn on notifications. We frequently break down stories like this, and your support allows us to keep digging for the truth. Now, it's fair to be skeptical. We've heard these grand promises before. Remember Foxconn in Wisconsin? In 2017, President Trump, holding a golden shovel, declared it the eighth wonder of the world. A $10 billion investment, 13,000 jobs, a manufacturing miracle. What happened? It was a colossal failure, a flop. Instead of a 20 million square foot complex, Foxconn built a single, empty building 1/20th that size, later zoned for storage. They hired just 281 people, failing to meet even the lowest targets to get their subsidies. Families were forced from their homes for a factory that was never built, while the local town racked up $1 billion in debt for useless infrastructure. So why is Apple's plan any different? The difference is everything. The Foxconn project was a political stunt searching for a business case. They got the promise of over $4 billion in subsidies first, and only then did employees try to figure out what to actually do there, considering everything from fish farming to renting out storage space. It was a top-down political mandate with no economic soul. Apple's plan is the exact opposite. It's a bottom-up business strategy, elegantly packaged to serve a political purpose. Apple has a pressing multi-billion-dollar business imperative to de-risk its supply chain from geopolitical chaos. This investment is the solution. Instead of one giant risky factory, Apple is acting like a massive venture capital fund. It's injecting money into a distributed network of existing, expert American partners. They're giving Corning $2.5 billion to expand its existing Kentucky plant to make 100% of the world's iPhone glass. They're the anchor client for TSMC's new chip fab in Arizona, guaranteeing demand that makes the entire project viable. They're funding an expansion at MP Materials in Texas, the only domestic producer of critical rare earth magnets. This isn't a hollow promise. It's a calculated fortification of its own supply lines. The political win is just a very convenient side effect. And this reveals Apple's true master plan. The real takeaway from the Trump announcement today: Apple is redefining what Made in America means for the 21st century. The political narrative focuses on the final assembly, the last turn of the screwdriver. But that's low-value, low-margin work. Apple has realized the future isn't about assembling things in America. It's about creating the most valuable, most defensible parts of the product here. They are building an end-to-end American silicon supply chain projected to produce over 19 billion chips in the US by 2025. They're securing the glass, the magnets, the lasers. They're even building a new factory in Houston to manufacture the powerful servers for Apple Intelligence, the brains behind their AI future. At the same time, they continue to diversify assembly to places like India and Vietnam. This is a deliberate, brilliant strategy of geopolitical decoupling. Apple is building a Fortress America model for its most profitable market. The high-value R&D, design, and critical components are being brought home, insulated from global shocks. The lower-value assembly is friend-shored to allied nations. Meanwhile, the hyper-efficient China ecosystem will continue to serve other parts of the world. This isn't a retreat from globalization. It's a strategic rewiring of it. It's a blueprint for resilience that every other multinational corporation is now being forced to study. The $600 billion commitment is the price of building the American node in this new global network. It ensures that no matter what happens in the world, the river of iPhones and profits in America will continue to flow. So, the next time you hear a Trump announcement today or any political declaration about bringing manufacturing back, look deeper. The real story isn't about the number of jobs. It's about the type of jobs. It's not about where the product is assembled, but who owns the intellectual property, the critical materials, and the silicon brain. Apple, under immense pressure, didn't just survive. It created a new playbook for corporate power in the modern age. They paid their insurance premium, secured their supply chain, and in the process, laid down a blueprint for the future of American innovation. And that is a story far more valuable than any headline. Thanks for watching. If you learned something today, hit that like button. It tells the YouTube algorithm that deep dive analysis matters. See you in the next one.